Wall Street's main indexes closed slightly lower on Thursday after higher than expected inflation and jobless claims data. The Dow dipped more than 0.1%, the S&P 500 slipped 0.2, and the Nasdaq ticked down marginally. The number of Americans filing new unemployment claims last week rose more than expected, and a closely watched consumer price index reflected a marginally higher inflation rate in September than economists had forecast. But J.D. Hatfield, CEO of Infrastructure Capital Advisors and CIO of ICAP ETF, said the CPI report was actually fairly strong when you looked under the hood.
The shelter component actually improved dramatically, which bodes well for the future reports, not PCE at the end of this, but next CPI. And the parts that printed hot were very volatile. So we actually are more bullish after their report. And that's somewhat reflected. If this was just a bad inflation report and shelter was still high, market would probably be down more like 50, 60 handles, or more like a full percent. And it's relatively flat today. So most people are interpreting the way we are. Still going to get Fed rate cuts. Inflation is coming down, and it's appropriate to be bullish on the future of the market.
Stocks on the move included Delta Airlines, which fell 1% after forecasting quarterly revenue below expectations in anticipation of slower travel spending. Shares of American Airlines also lost ground. Pfizer shares fell almost 3% as former executives distanced themselves from activist investor Starboard's campaign against the drug maker. Investors now turn their focus to third-quarter earnings, with major banks scheduled to report results on Friday.